And Diana Avigdor is Vice President and Portfolio Manager, as well as Head of Trading at Barometer Capital Management. She joins us now from the TSX Broadcast Center. Diana, great to see you, and thanks for joining us with all those titles, 3 titles, and a really crazy week. What do you make of it all?
I can't. I'm so happy it's Friday. And how long do we have? Because this week was really busy. I don't know where to start, really. It was a confluence of events. I thought that the market was a little acting strange when the FOMC minutes came out a couple of weeks ago, where the market rallied on the fact that the FOMC members said that they saw growth slowing because of Europe. And we know Europe has been the worst surprise of this year. And then it kind of got mixed up with what I think are some financial flows, which have nothing to do with fundamentals, that have to do with the oil market, that I think that spurred a lot of deleveraging. The correlation between, we know that the correlation between oil and Toronto market is very high, but the correlation between oil and the S&P has not been so high. As a matter of fact, there's the argument that a lower oil is better for the S&P in terms of consumption and so forth. However, the correlation was so high, it always made you feel like somebody was in really bad pain, and then it just kind of avalanched.
Diana, you know, it's interesting because I guess over the past couple of weeks, everybody was really trying to figure out and focused very much on the price of oil, the significant decline. Maybe people expected the direction to be downwards, but they didn't expect the magnitude. So what do you think we know about that magnitude now, and has it stabilized?
So you have seen oil doesn't drop 2 and 3% a day the way it all of a sudden has. So you can argue that there was some technical breakdown. And in today's market, the money flows are so huge that it is almost like a herd mentality. So when one triggers, then it just kind of goes. But it just looked like it was a lot of margin calls. The volumes were high. You know, honest, it was very unorderly. You also have, for Canada, for the Canadian banks, for example, you have the end of their fiscal year. There's not much market making being done. There's not much activity that they want to do. In the bond market, of course, you have a couple of less stabilizers, as the banks do not take any bonds on their own. And so those, I'm not saying a buyer is gone because bonds, for example, rallied, and so why did they rally? There is a buyer. But there's no stabilizers as such in the market.
Yeah, Diana, I want to pick up on that point a little bit more because for 2 reasons. One, as we were looking at the U.S. markets this week, I've been trying to hopefully communicate the story on television, on BNN, that, you know, I think what we've learned is that so much of that crazy volatility and those crazy swings in the U.S. market, maybe it was driven in part by some of these big healthcare hedge funds in the United States. But here in Canada, I think you bring up a really great point that I've also heard, which is that because it's the fiscal year end for Canadian banks, that they don't necessarily maybe come into the market and stabilize the way they would in the past, and or the way they would if it wasn't like 10 days by the, you know, until the quarter ends. So you tell us what you see as a money manager and a trader on the buy side.
Right. So you know, there is liquidity, but it comes at a very high cost. So when you're trading something that, you know, has a temperament of, you know, 1 or 2 cents in terms of cost, and it all of a sudden costs 25 cents or 35 cents, because that's how much it costs you to move it. Every time you try to buy it, it jumps on you. There's no stability. There's no much activity. And that's why when volumes are thin, the volatility is higher, because there's less stabilizers, whether it's natural stabilizers or market maker stabilizers. So you see that volatility, and that volatility triggers a lot of things. Our market a lot of it is electronic. There's algorithms that pick up on the volatility and start getting more aggressive. There's also people that see the volatility and misread it and get more aggressive. And so it kind of snowballs.
Diana, what we've just talked about really are just some of the natural market mechanisms that can come into play. Maybe that's what this was. How do you view the fundamentals right now then, if these were in fact market mechanisms that made these swings so volatile and wild this week?
Right. So I'm very happy that we have a process. At Barometer, we have a very, very disciplined process. It takes the emotion out of the investing process or the cash raising process. So as stocks sell off, we have very tight stop losses. You know, we always talk about when markets are up, be in the strong sectors. And what do we buy? We buy the strength. And what's the strength? And what stocks are strong? What do you do when there is relative weakness? You start paying attention to your stop losses. It naturally takes you out of certain positions. Now, in the beginning of the year, when we were overweight energy, and energy started underperforming, it started to naturally take us out of some energy positions. The market was positive. We redeployed it in where strength was. At the time, it was US, technology, healthcare, and so forth. So we were about 65% US, 30% Canadian. Now we're about 35 and 35 as the last leg has started taking us out of some US positions, and we have high cash. Have we redeployed it yet? No. We worry about certain other headlines. There is Ebola headlines for sure. There's growth headlines. Never mind that today the ECB said they're going to start buying asset-backed securities, and yesterday's QE news. Well, market needs to see a couple of more stable days, and buyers will come back at higher levels, as unintuitive as that sounds.
Diana, good to see you. Thank you so much for joining us. I know and can appreciate it's been a very, very busy week for you.
Thank you very much.
Thank you. That was Diana Avigdor, Vice President, Portfolio Manager, and Head of Trading at Barometer Capital Management.